Well, good afternoon. I know that we have a high school class here because everybody's sitting in the back. That's what I used to do when I was in high school. So it's really good to see everybody. We're going to start our City-County Reinvestment Task Force. For the record, it's Thursday, November 17th, 2011, 12 o'clock. We're here at the committee room at 202 C Street. And we usually start with introductions. We'll start off to our right here and then we'll move around.
Good afternoon, everyone. Murtaza Samusa, a public member.
Kathy Padoff, Union Bank.
Good afternoon, everyone. I'm Roosevelt Williams III, and I stay at Council President Anthony Young.
Tony Young.
Mirta Schloss, RTS staff.
Vino Faro, to the Housing Opportunities Collaborative.
Angie Lucero, Bank of America.
Christy Gregg, US Bank.
All right, well, thank you. We usually start off with public comments. Is there any member of the public that wants to speak on non-agenda public comment? Or on the actual agenda?
I can't hear you.
Yeah, there are many people
Public
who want
comment.
to speak.
I won't let folks speak from the audience like that. These are non-agenda comments. Okay, what we'll do is, because I want to make sure this committee starts and we get our items through, I am going to start with item number 5, which is, well, I'll take an action for approval of minutes of October 20th, 2011. Take a motion for that.
So moved.
Second. All those in favor say aye. Aye. That passes unanimously.
Mr. Chair, to speak for abstain since I wasn't here.
Oh, all right, was that the record? We'll reflect that.
Mr. Chair, the same goes with me.
Okay. All right, with that, we'll go to item number 5. Item number 5 is state and federal foreclosure legislation and the neighborhood stabilization program. Jamie Bradford, Director of Intergovernmental Relations Office for the Mayor Sanders is here, along with a couple of other folks, and you guys want to introduce yourself.
Chairman, Council President Young, thank you for having us today. With me is Almas Udris from the Mayor's Office, also Intergovernmental Relations, and Vicki White from Economic Development Department. And our plan today is to give you an overview of state and federal actions as it relates to foreclosure activities. And then Vicki will discuss how the City and Housing Commission administer the Neighborhood Stabilization Program. And we're going to start with state legislation. I'll turn it over to Almas.
Thank you, Council President Almas Udris. I'm working in intergovernmental relations in the Mayor's Office. You don't need me to tell you that the climate up in Sacramento is pretty contentious and a difficult environment most recently. The Legislative Analyst Office just released a analysis and assessment of the state budget situation and projected a $13 billion budget deficit going into the next fiscal year, which would be starting in July. And also the concern over the trigger cuts that are likely to be taking place at the beginning of next calendar year. So our anticipation is that most of the focus for the legislature up in Sacramento is going to be on those issues in the coming year. However, there were 12 pieces of legislation that were introduced that are to varying degrees related to foreclosures and attempts to mitigate them, hold mortgagees accountable, those that issue mortgages, to try to assist the situation. I'll give you a couple of examples. Only one of them passed and has actually been signed by the governor, and that is one related to reverse mortgages and how an insurance broker agent can offer insurance related to reverse mortgages. The rest of the bills are what are called 2-year bills, which means that they may come back into play this next calendar year. Some of them have to do with establishing a prudent debt-to-income ratio for borrowers, as well as requiring that the broker discuss with the borrower advantages and disadvantages of certain loan options and be held accountable if they issue a mortgage that is less advantageous to the borrower than another option that was offered to them. Again, I'd reiterate that predominantly most of this legislation will stay alive and see the light of day this next legislative session. So I would expect that many of these bills will still be tracked over the next year, given that it's a 2-year legislative session.
And on the federal side,
James, before we get to the federal side, I wanted to make sure that the task force could ask a few questions related to the state. I'll start off by, I mean, is it your understanding that what's going on with the general kind of the state of mind of the Assembly and the Senate, are they really aggressively going after these issues when it comes to foreclosure policy, or is it kind of like on the back burner to the budget?
My impression is that the budget is the predominant issue of the day, and that very little activity has occurred over the last 3 years, as we've seen $60 billion budget deficit 3 years ago, a $20 billion deficit the year before, $26 billion deficit last year, and now a $13 billion deficit going forward. That has really been the predominant item on the plates, and given the contention that occurs when you're discussing budgets and taxes and cuts, that most anything else gets swallowed up in that whole debate and is for good or ill, oftentimes for ill, affected by that rancor.
Do you know which members, either from our delegation or maybe even from the state, that might be easier, that are really aggressively addressing these issues, or do we have any champion up in Sacramento on this?
I can tell you that in the bills that were introduced this most recent year, Assemblymember Davis appears to be quite active.
Senator Davis is from where?
I believe he's from the LA area. I don't recall specifically the district. Also, Senator Vargas introduced the bill, and I know that Senator Leno, and also I've had some experience up in Sacramento myself before my current position down here, and I know that Senator Leno was pretty active on that front.
Yeah, he was.
Senator Correa is concerned about the issue as well. Those would be sort of looking at the most recent list without going back into earlier years. In my own experience, those would be the names that come to mind.
And from your experience, the state of California, obviously the city of San Diego has very limited control, if any, over the banking industry. What is the role for a state government in regards to this? Can you give us an overview or kind of general understanding of it?
Well, the state obviously will, in most areas of banking and finance, will mimic, although oftentimes they'll start with the federal law as the basis for how they regulate banks and financial institutions. And in many instances, the state will go beyond what the federal law requires in regulating a variety of banks and institutions. My personal experience has been in healthcare, and I know that in insurance law, it's far broader, far more expansive, oftentimes more, from the industry perspective, they're not always the biggest fans of that additional regulation, but from a customer, consumer watch and customer concern, those groups are far more interested in the way California does its business. So that's my general.
But the fact is, and I understand, you're here to report on the bills.
Mm-hmm.
The bottom line is that they do some regulation.
They do. There is a banking and finance committee in the assembly, and there is I believe it's the banking and insurance committee at the Senate, but don't quote me on that. There are committees that handle all bills related to banking and finance, and those are the committees that deal and handle with legislation such as this.
Right, and of course we have some representatives here who can probably fill us in as we move forward. All right, thank you, Jamie.
thank you. I guess similarly on the federal side of matters, it is also contentious in DC right now. I think we're looking at another CR that expires this week. While we're making some progress on some of the reauths of transportation and FAAs coming up again, things have pretty much slowed down as far as advancing anything while the super committee meets, and as DC waits for the super committee to report out. November 23rd, assuming that they come up with a plan. So what has been the main source of funding as it relates to foreclosures since 2008 is the Neighborhood Stabilization Program. It is administered by HUD, and it aids in the purchase of foreclosed and abandoned homes to rehab, resell, or redevelop these homes. There were 3 rounds of NSP. The first round, and I don't know if I'm already going over things you already know about.
No, I think it's good to go over these now.
Okay.
And
Thank you. The first round was passed in '08. It provided $3.92 billion of formula-based funding. The second round was part of the administration stimulus package in '09. It provided $2 billion, and that round was competitive. And then NSP 3 was passed in July of 2010. It provides $1 billion, and it goes back to NSP 1's formula-based funding. The funds can be used for establishing financing mechanisms for purchase and redevelopment of foreclosed homes. It can be used for purchase and rehab, being of properties that have been abandoned or foreclosed. Rehab may include improvements to increase energy efficiency and provide a renewable energy source. It can establish land banks for homes that have been foreclosed. It can be used for demolishing blighted structures, and it can be used to redevelop demolished or vacant properties. Funds cannot be used for activities ineligible under CDBG, foreclosure prevention, demolition of non-blighted structures, or purchase of properties not abandoned or foreclosed upon. They have 3 main targeting requirements. The first is that all funds must go towards programs that serve individuals and families whose income does not exceed 120% of AMI. At least 25% of the funds must be used for the purchase and redevelopment of abandoned, foreclosed, or vacant homes that will be used to house individuals and families whose incomes are less than 50% of AMI. And jurisdictions that receive NSP funds must give priority emphasis to areas of greatest need within their areas, including areas with the greatest percentage of foreclosures, areas with the highest percentage of homes financed by subprime mortgage-related loans, and areas identified as likely to face a significant rise in the rate of home foreclosures. As part of President Obama's Americans Jobs Act, he introduced Project Rebuild, which I provided in the backup some information on. It's been referred to as NSP 4. It is kind of expands on the previous rounds of NSP. It's the last page of your backup. And as you're probably aware, the American Jobs Act has faced opposition in Congress, particularly Project Rebuild will likely face opposition in the House because anything that resembles stimulus programs, which NSP was funded by, has faced opposition in the House. So there isn't a bright look for Project Rebuild at this point. And then finally, in late October, President Obama issued an executive order to expand the Home Affordable Refinance Program, otherwise known as HARP. FHFA and the Department of Treasury introduced HARP in early 2009 as part of the administration's Making Homes Affordable program. HARP provides borrowers who may not otherwise qualify for refinancing the ability to refinance their mortgages into a lower interest rate. This program is unique in that it's the only refinance program that enables borrowers who owe more than their home is worth to take advantage of low interest rates and other refinancing benefits. And it will continue to be available to borrowers with loans sold to Fannie Mae or Freddie Mac on or before May of 2009, and with current loan-to-value ratios above 80%. And then I'm going to turn it over to Vicki for additional information on NSP and how the City and Housing Commission administer it.
When it comes to your overview, I'll just say probably like limited. We're fairly familiar with NSP. Just so you know, we've spent most of that money, as far as I can see, when it comes to buying those foreclosed homes or homes that are in distress. And I think you've done a very good job here at the city. The issue for us is where can we go forward, and if you see anything in the future that will allow us to do so. And also, Jamie, regulation or the additional issues related to banking regulations that might come up. Go ahead.
Thank you. My name is Vicki White. I'm with the city's Economic Development Division. As Jeannie said, we oversee the NSP program along with the San Diego Housing Commission. The Housing Commission carries out all the activities and the city oversees them as the primary grantee from the Department of Housing and Urban Development. As you said, we have expended most of our funds. We've actually spent more than our grant amount right now due to some activities where we purchased and then resold homes, so we had additional income coming in. The total amount that we've expended so far through our Neighborhood Stabilization Program grant is $9,475,000 approximately. The amount that we've spent.
Go ahead.
The amount that we've spent specifically on housing-related activities is approximately $9,073,000, so the difference is the administration activities costs.
Try to speak a little closer to you.
Okay. And as of right now, we haven't done any new activities in a little while because we had expended most of our NSP funds. We are currently looking at reallocating some of the funds from the activities that it's currently allocated to the direct purchase and resale activity. We have some remaining funds related to the program income funds, the funds we had back from the resale property, so we had leftover funds in some other areas. And we may have some additional administration dollars that aren't going to be used over the long-term administration, so we're looking at if we can reallocate those to the direct purchase activity to carry out a couple additional home purchases and then resales. But I have some statistics on the number of activities that the number of assisted properties that we did by activity, if that's of interest to you, and where they were located.
Well, more so, yeah, if you can give us a profile of what types of properties you purchased with these funds and who gets to live with them now.
Okay, as Jimmy said, the program is open to anyone who makes up to 120% of area median income. So it was really up to the home buyers. The way the program worked was the Housing Commission worked with mortgage brokers outside of the Housing Commission, trained them on the requirements of the Neighborhood Stabilization Program, and then as potentially eligible home buyers came to those mortgage brokers, they let the home buyers know that this program was out there, and then the Housing Commission was able to provide silent second mortgages at 0% interest for between 17 and 27% of the home's value, and they were also able to provide closing cost assistance grants for up to 3% of the final sales price to assist those home buyers in purchasing those homes. So if the home buyer stays 30 years, they don't have to make any payments on the second mortgages, and then the full balance of the mortgage is due upon 30 years. And the Housing Commission also provided rehabilitation loans to the home buyers to bring the homes up to the Housing Commission's home rehabilitation standards that were in our Neighborhood Stabilization Program substantial amendment. And those loans are completely forgivable if the home buyer stays in the home for 30 years. The majority of the assistance we did give out was in that financing mechanism style assistance. The Housing Commission did also directly purchase 7 homes. The reason that they did that was in 2009, the home buyers, the home buyers who were out there looking for foreclosed homes and putting out bids with the knowledge that they'd been pre-approved for the second mortgages from the Housing Commission weren't being successful in their bids because there was a lot of competition from cash investors.
Right.
And so the Housing Commission found that they could get access to the bank's first look list of foreclosed properties that weren't on the market yet and directly purchased those homes from the bank. So 7 were purchased by the Housing Commission and then resold to first-time home buyers that met the income requirements for the NSP program. And then the Housing Commission also provided purchase assistance and rehabilitation loan assistance to those home buyers. There were a couple of rental activities as well. The Housing Commission assisted in the purchase of a 30-unit rental housing property that's our low-income housing set-aside project, and that's in the North Park area, and that'll be rented to households between 50 and 60% of area median income.
That's not rented out yet?
No, that's still under construction.
Under construction.
Yeah, that should be completed, I believe, next year. And then there was another multifamily property, it was a 4-unit vacant property that was rehabilitated and is now rented out to households earning up to 50% of area median income.
Well, let's take the time and see if we can open up, if there's any questions from the task force.
Federal regulations on foreclosures and banking. Essentially, I'm thinking specifically about the right to rent. And I was wondering if there's any movement towards making sure that people can continue to stay in their homes when banks foreclose on them.
Have you seen anything like that
Yes.
at all?
Excuse me, but I could not hear the comment. Could I?
We're not going to take comments from,
I could not.
you're not
hear
going
the
to interrupt
question.
my meeting.
I
And
could
I
not
understand,
hear the question.
I understand.
I would like to have the question repeated. Thank you.
Answer the question.
I believe the question was whether there was any
Thank you.
legislation or activity with regards to keeping renters within foreclosed
Well,
properties.
the right to rent specifically refers to people that are being foreclosed on, that can continue to live in their homes after and during the process of foreclosure. And that is directly a commitment from people that are owning the mortgages. This legislation is being proposed at a federal level by several senators, and I wanted to inquire if there was anything we can do here, maybe even model a program here that we can start implementing with NSP money.
I'm happy to review that
But we don't
and
have
report
any,
back.
we don't have any NSP money left, right?
Correct, we don't have very much left. There is an option, the CDBG programs on which the NSP program is, on which the
Right.
NSP program is modeled, does allow lease purchase programs where a home buyer can purchase a home and then essentially rent it for a certain period of time, for instance, a year, and then make payments into an account whereby they'll essentially build up the down payment on that and then purchase after the lease period.
So we could use CDBG monies if we wanted to set up a program.
Yeah,
like that.
it's difficult. HUD is suggesting that as a way to deal with any properties that may be foreclosed on that received NSP assistance, but it is it's a type of program that requires a lot of staff time, a lot of financial assistance, because you have to keep track of all the accounts of the home buyers, and then it can get difficult too if the home buyers aren't able to make their lease payments. So it's not something we've ever implemented at the city, but it is an option out there for consideration.
Well, Dr. Baksimusa, you're familiar with some legislation that
Right.
can be,
No, I think that we're
Brought
looking
to
at
this committee.
prospectively. We're not looking at money that was already spent. In fact, it would be nice to have a written report on the NSP expenditures, but we're looking
well, that's what she
prospectively.
just did. She just gave that, and she has the background information on that.
Well, okay, and going forward, whether there's NSP reauthorization or money at the state level, the question really is, can this task force play a role in bridging the gap? And if not, if it is really just a regulatory mechanism that we can use to make sure people stay in their homes.
Mhm. Okay. Any other comments at all? Bob?
Mr. Chairman, if you permit me to expand on that just a bit.
Yeah, we all have to speak in the mic. I appreciate you say that, because I think people, and I
Right.
apologize, I'm trying to get people to hear better.
Thank you.
I'd like to ask some of the bankers, because I've been away from this business for quite a period of time, that when I was in the business and we had severe financial crisis like we did in the early 60s here in San Diego, one of the ways we solved that was to keep home buyers in their homes if they could pay a rental amount, in effect a rental amount, as long as they were qualified individuals who wanted to stay in their homes and were capable of making some payment. Some payment is better than a vacant house or a vandalized house, and particularly with people that have a pride of ownership. Now, one of the negatives about that from a banking perspective was that the regulators did not like that. They would classify these loans as non-performing or otherwise in a negative fashion. So it gets back to my question to the bankers. Is there anything that today, from a regulatory perspective, that would make good common sense, which that did, but because of regulation prohibits the bank from using good common sense to solve problems like this crisis that we all identified?
I will respond that as far as a regulatory perspective, I won't comment on regulation, but I will comment on what Bank of America has done. And truly, it's not to anyone's benefit that we foreclose on a property. But the statement that you made about having individuals that are qualified and have the ability to stay in their homes, we're absolutely working with them to be able to have them do that.
How do you do that, man?
We do that by having them come in, set up an appointment with our center, or just call on the phone, review their financial situation, and see what type of payment they are able to afford. And then if that gets approved by the investor, whoever owns the loan, then we're more than happy to do that. Unfortunately, sometimes that doesn't happen. Then we come up with a solution that's the best solution for them. Perhaps it's a short sale, perhaps it's in lieu of deed. I mean, there's all sorts of different solutions. So my recommendation is that if anyone is in that situation and has difficulty, contact your lender. And it's not just Bank of America, it's all of the financial institutions.
Thank you, Angie. The ultimate holder of most of these mortgages is Freddie Mac and Fannie Mae. And they're the ones that are, in many instances, I've heard, and my information is anecdotal because I'm not an active guy in this business anymore, is that they're at times very difficult to deal with, and they provide a blockage in the process. Would you agree, disagree, or comment some other way? Have other comments?
My comment would be that we work very closely with Freddie and Fannie, and we try to do as much as we can to solve the issue. Perhaps we could have Fannie and Freddie come in and do a presentation for us.
Oh, that would be great. We'd love for them to come, and we've asked them to come many times. It's a little difficult for them to get here. Vino, I'm sorry, Bob.
Well, just one final comment. I really applaud what Housing Commission and others have done locally,
And
because
Bob,
you have to.
I would just have to say that, I mean, this task force supported this program right away. Matter of fact, some of those recommendations on how they have actually created NSP reflected some of the recommendations we made even before they even sent it out, which was land bank, buying foreclosed homes, making sure that these neighborhoods don't experience the blight that comes from foreclosed. This task force advocated for that, and you were a big part of that, so I appreciate it.
Well, because I guess my point is that problems are solved at a local level.
Yep.
And the further away you get away from the local level, the more difficult it is to find rational solutions. And what we need to communicate, it seems to me, is to give more local authority and more local input, because we have many organizations in this community that do great work, but they're hamstrung many times by external distant forces.
And even now, and I hate to keep butting in, I'll stop and I'll get Vino to speak, but the fact is, when I hear that the federal government and the state, you got the Congress and the state assembly and Senate over there, not focusing on this issue that's so important to this community, to this city and cities throughout the state, that really troubles me, because there's another wave of foreclosures that's coming through. We're seeing it right now. And to think that this is not on the forefront is very, very troubling. Very troubling. And that's, we have to really get on our ball. We have to get up to Sacramento, looks like, to see if we can get them started again. Lino?
Mr. Chairman, thank you for the presentation for the city and for the Housing Commission too. We have seen homeowners come in and they are trying to negotiate. Some of the services are here at the table, but most often the investor is the key holder, as Bob had mentioned, and they either work or they don't work. So the important factor is there is this, I could say, a curtain, opaque curtain between the investor and the actual beneficiaries of the either loan modification or a short sale or whatever it is, and the local community. So they do not know that there's a disjoint over there. The second factor that we would like to say is, over the past 4 years that we as a collaborative have done this foreclosure counseling with our partners, we have seen a trend recently that people are coming in for counseling, Mr. Chairman, and they are coming with the idea that they want to learn about what's available, but they've already made a decision to walk away from their homes, walk away from the commitments that they made a few years ago when everything was right. And that is becoming a trend, and especially what you said, Mr. Chairman, as foreclosure is not gone. We are hearing the Federal Reserve, FDIC and others saying that we've got another full cycle of almost 4 million homes across the nation, at least in the minimum, 4 million homes to go through foreclosure. And they are also here in San Diego and in California. So if the attitude is to walk away, then what are we bringing to our local communities? These are also good neighborhoods we're talking about. It's just no more the neighborhoods that were underserved communities in the prior areas. So there is a need now to focus on how we are going to educate these homeowners, how are we going to work with the investors as well as the servicers to enable them to come to a common understanding, because sometimes it doesn't work to stay in a home. But how is there a smooth transition from being a homeowner to being a renter, and then getting back on the track to be a homeowner again after a few years? So that's something that as a reinvestment task force that we should be thinking for the future, 5 to 10 years from now.
No, and I agree, and we're going to get to public comment in a second, but bottom line is, we see it. They apparently aren't seeing it. And we have to reassess and hear what the people of San Diego have to say about it, what they're experiencing, people who work with these folks every day. And then we create some recommendations, not only to the city council, but the board of supervisors, and ultimately to our state legislature and our federal legislature on what should happen next. That's what the role of this task force can actually play. So with that, we're going to go to
Mr. Chair?
yes.
Can I ask a quick question?
Sure, Kathy.
I'm curious how the city's performance with NSP compares to performance of other municipalities in the region, and if we were to roll up performance as a region, how would we compare to other regions in the country, so that if funds were to become available or a new initiative, would we be competitive in a competitive process?
So the question is, how are we performing compared to other cities? I say that because I wanted to think something came out. Go ahead.
That's a good question, and I can research that further. Normally, mostly because of the short timelines for this grant, we were kind of focused on meeting our targets. But I know that we did actually really well in the speed with which we obligated all of our funds, because the first hurdle we had to get to was that we had 18 months to commit our full $9.4 million to specific activities, through contracts or purchase agreements, that kind of thing. So we did very well with that. We committed it well in advance of our 18-month deadline. But in terms of numbers of accomplishments, I'd have to do some research to compare it to other similar sized jurisdictions.
All right, we're going to get to public speakers. This meeting is probably going to be over around 1:15, so we've got to make sure that we're time conscious. Give you a couple of minutes to speak. Roosevelt, the time. We'll start with Michael Anthony, followed by Jeff Olson, followed by, I think it's Diane
Conklin.
Collin. Go ahead, sir.
First things first, I want an explanation of why my name was removed from the mailing list. I didn't get a notice having to do with this meeting. Also, I have not seen the minutes from the last time that I was here to try to rectify those in an equitable fashion. So that's 2 or 3 series of minutes that my comments were not transcribed correctly. And then third, I want to say publicly, and I think I've done this for several months ongoing now, Mr. Parnor is operating a fraudulent operation and is sitting here in this august body with the Housing Commission.
Yeah, this is not agenda public comment. This is about the issue of foreclosure, so you can focus.
This is
on it.
exactly about foreclosure, sir, because Mr. Parnor's agency is the prime agent for taking care of these types of matters for the city. And again, my question stands, Mr. Young.
All right, thank you, sir. Jeff Olson, followed by Diane.
Conklin,
Go ahead.
make it a song.
I want to thank everyone who mentioned right to rent, and I noticed how Ms. Lucerno started to squirm when that came up today. I believe that could be the solution to right to rent could be as simple as a bank policy that allows people to rent their homes that they've been foreclosed on. I'm not sure that we have to go as far as Washington, D.C. to get the right to rent. And also, as you deal with Ms. Lucerno, who I'm sure is a nice person, please remember that
She is.
The Bank of America entities have agreed to pay a total of $137 million in restitution to federal and state agencies for its participation in a conspiracy to rig bids in the municipal bond and derivative markets. That's from an almost year-old Department of Justice report. So I'm sure she's nice, but please remember, she represents an organization that admits to the Justice Department that they commit fraud.
All right, thank you. Next speaker.
Hi, my name is Diane Conklin, and I am not your exact constituent because I live in the county of San Diego, in an unincorporated area. But I came down here today because I have been following the Occupy San Diego movement on my computer. And my husband bought me an iPad, so I can write it and follow Occupy San Diego on my computer.
Very nice.
It's very nice. He also bought me a bullhorn. I did not bring it. Everyone should have such a spouse. I wanted to talk to you just person to person, if it's possible, to talk to a group of people person to person. First of all, thank you for asking people to speak up. You must talk into the microphones because people like me are hard of hearing or other people can't hear. It really makes the whole meeting very difficult to follow and not as interesting. If that's your purpose.
Certainly
I
not
can
our goal.
understand. Right, but I'm hoping that it's not true. I just wanted to say that it is astounding to me, and I'm sure it's astounding to some of you, that we have no action on these bills in the legislature. The most amazing thing to me is the bill for reverse mortgages. You know, I'm approaching the age when you might think about doing a reverse mortgage if you wanted to. And the bottom line is that that's another equity issue. Huh? So that one passed. But it seems like there's no movement. And I think that if there's confusion, and I say this with all my heart, regarding what the Occupy movement is about nationwide, it is about exactly this kind of thing. And thank you very much for the full report that you gave from the mayor's office. We have a crisis of confidence in our government. It's not a crisis of confidence only in the banking sector, although there's a great crisis there, but we have a crisis in the government as well. So whatever you can do, do it, because people are truly watching. And I do request that the City Council put the Occupy San Diego on their agenda. It doesn't hurt you. It will help you. The resistance is only hurting you. Thank you very much for listening.
Thank you for those words. I appreciate it. Melissa Behrens, followed by Anna Daniels.
Actually, I was doing this kind of non-agenda, so it wasn't directly related to, but I just wanted to ask why the city's funds are being housed in the non-local banks. Why don't we move them into the local credit unions who are reinvesting in this community on a much, much broader spectrum? if the council wants to address that at some point, like, I would appreciate an answer to that.
I would just tell you, Melissa, if you go back on the record when it comes to me, I believe that we should utilize our leverage as a city to really encourage and in some ways force these lending institutions to treat our constituents better. And I've said it many times, this is a multi-billion-dollar company, essentially, the city of San Diego. And we've done some things through the recommendation of the task force where banks have to, or lending institutions have to respond. We'll put you on hold for a minute. They have to respond when they do an RFP. They have to show their record when it comes to investing in our community. We got that a couple of years ago. But I think that we should do a lot more. We should also look to, and we did one policy change where we invested more money in local banks, ones that do a lot of work in our community. So there's some movement there, but you're right, this behemoth of the city of San Diego's resources can be utilized to kind of change the way the institutions actually interact with our community.
Is that something that you would actually be willing to propose to the council to start actually, get staff recommendations as to how we can move the city's money into the local banks and into the credit unions on a bigger scale? I mean, personally, I would love to see all of the city's money out of these big conglomerate banks and back into banks that matter in this community and that actually have an effect on this community.
Well, I'll be, we brought those issues up. Obviously, there are some financial considerations I have to make. I mean, we have to be good stewards of the public's money, and we have to try to find the best way to utilize our money. But, in concept, I think we should be diverse in how we, where we invest our monies.
Yeah.
Thank you. Hannah Daniels, followed by David Odo. Good afternoon.
Good afternoon. I reside in Council District 3, which is the third highest rate of foreclosures in the city of San Diego. I would like to build on what Melissa just said in the past, which is to remind the committee, as you already know, that the city of San Diego is anticipating $1.1 billion in revenues this year, and those revenues are held in Bank of America accounts. I hope it is more than free checking that we are getting in return for that deposit, for those deposits. It is really essential that we negotiate with the Bank of America that if they want to retain the city of San Diego as its customer, our conditions are debt forgiveness and accountability in return. Bank of America must agree to keep people in their homes by writing down the difference between the current market value of the home and the principal owed on the mortgage if the home is underwater, refinancing the loan with a reduced interest rate so that the homeowner can afford the monthly payment, provide an annual report to the city of San Diego which includes the total number of mortgages they hold that are underwater, the number of write-downs, and refinance information. This is absolutely essential, and we need to start doing this. And we're here to help. We are Occupy San Diego. We are the 1%, or the 99%. And we want to make sure that our city is not part of the process of transferring our public funds to the 1% wealthiest among us. Thank you.
Thank you. David Otto, followed by Ray Lutz, followed by, I don't know how this happened, Ray Lutz. So that's okay. Go ahead.
Thank you, Co-Chairman Young and members of the City County Reinvestment Task Force. I wanted to speak about the disturbing lack of disclosure that I've been witnessing over the past few years with regard to the activities of this task force. In the past, my requests for public documents were fulfilled by the previous reinvestment director with the utmost dispatch. And as the Reinvestment Task Force also maintained a presence on the internet, many of those reports are also available online. During the past few years, however, all of this seems to have changed. The current webpage of the Reinvestment Task Force consists of a one-page description of the task force's mission statement with the email address of its staff director, There are no reports on the activities of the task force, and there are no updates on the community reinvestment activities of the various banks that comprise this public agency. And I believe that the most recent summary of that activity was published in 2007. In conclusion, I would like to express my gratitude to Union Bank and US Bank for providing me with copies of their most recent community outreach results for San Diego County. And I urge the other member banks to follow their example. And in the future, I hope that this task force does a better job of keeping the public informed as to its efforts to foster local compliance with the federal Community Reinvestment Act, consistent with San Diego City Council Policy Number 900-09 and San Diego County Board of Supervisors Policy A-123. Those are the local community reinvestment policies. And I thank you very much for your consideration on this matter, and a written response would be most appreciated.
All right, we'll definitely follow up on that, and I wasn't aware that you were getting that information, but we'll work on that, sir.
Thank you very much.
Ray Lutz, we've got 2 speaker slips. I'll give you 5 minutes or 4 minutes, Mr. Lutz, and you can put them all together.
Okay, I thought that we'd get to talk about one of the issues on the agenda. That's fine.
No, this is.
Thank you very much. My name's Ray Lutz. I'm with Citizens Oversight, citizensoversight.org, and our goal is to get more public participation in public meetings like this one. I have to say it's pretty disappointing, as the last gentleman described. The website is pathetic. It has a link that's broken where it says more information, click here, it doesn't go anywhere. I asked for the minutes for the meeting. Where are they online? Not there. So how is the public supposed to come to the meeting and be responsible for their duty as citizens? Because as Chief Justice Brandeis once said, the most important office in a democracy is that of the citizen. It's our job to oversee what you're doing. And right now, we haven't been doing our job very well, and that's why this body is so used to a sort of club feeling in here where even the microphones are turned down and then no one can hear them. The speakers weren't all introduced. I had to try to find the names. They don't have nameplates. They're sitting away from the audience instead of getting up here and making their presentation like everyone else should. So over time, the public doesn't show up. Probably these seats are always empty. And then you get used to, no one's here. Why should we put the minutes on the website? No one ever reads them. So over time, it's not unique to this body. It's all of them going on. This one we're particularly concerned about because of a lack of fairness in what has happened in our financial system. Capitalism, people can do very, very well if they do a good job and they can get ahead. We're all for that because we want to see people do well and work hard and do a good job. But when the economy goes down, the people who did a bad job are not getting the short end of the stick, which they should. Instead, those bankers who did a bad job are getting rewarded. And the people at the bottom in these homes are being kicked out, and they did nothing wrong. Those are people who bought those homes in good faith, thinking that they were doing the right thing, they'd have a good investment. What happens? The financial system is worked over by these systems. Now, one other thing I'd like to suggest, you have a few more chairs here. Why not invite some credit unions and local banks into this little powwow and see if they can take part in some of the action going on in here? You've got only a few big banks in here. Can we do that? I think we need to the public really needs to scrutinize what's going on, because the banks are right now saying, well, we can get out of this without any problem at all. We screwed up, but we're going to take it down to the lowest level and hit those people who bought those homes. And unfortunately, I know the people in here, they're just trying to do their job. They work for a bank. They didn't do it. They're trying to make it happen, but we need your help. These banks that you work for at the very top did the wrong thing, and we need your help to try to reverse it. I like the idea of having taking a look at these foreclosures that are going on and see if we can't put pressure on the banks to dial down what's required instead of the options that you mentioned, which were a short sale. Kick them out, sell it, you're out. A short sale sounds good. It's not. The person's out on the street. We're down here with homeless all over the place, and we had the homeless task force toolbox meeting in the city council the other day, a new toolbox for the homeless, and no one's using the tools. You've got a great toolbox, but the tools are all sitting in there unused. So when are you going to start using these tools? I think we've got to get the public in here more, turn these microphones up, embrace the public, get the website working. Let's put pressure on these banks that have not done this. We want to work with you. The public is here to do this, so please let us do it. Thank you.
Great, thank you. And I'll promise you by the next month, we will look at this, the practices of what we disclose on our website. And that's troubling to hear that, and we'll follow through on that. Martha Sullivan?
Hello. I want to share a very individual experience here locally, that the result of foreclosure. You saw my friend Pam Hoy last week in a wheelchair come and tell about her mother, who was evicted from her board and care because that board and care was foreclosed and then auctioned off 3 days later. Since then, we've learned that one of the other clients in that board and care, a 100-year-old woman, she was not fortunate enough to get into another board and care. She had to be placed in a large skilled nursing facility. And she's been there for a few weeks, and she's already declined, visibly and markedly. And it's a direct result of having to leave the board and care where she was getting good care. She was getting stimulation. Now she's being warehoused. She spends hours in wet depends. We need to put the personal face on this crisis. And banks, I really echo what Ray just said. We really need the banks to step up and be citizens of this country and this state and this city, and be part of the solution and not stand in the way. You make billions. There is no reason why you can't be part of a partnership and keep people in their homes, keep people like this 100-year-old woman who was less expensive to have her in a board and care, where she got, more personal attention and has a decent quality life for the last few years of her life. It's a travesty. It's really a travesty. And you need to face up to it. Thank you.
Thank you for those comments. Those are, I really do appreciate you all coming out today. Can't tell you how much I appreciate that. And thank you for doing it, and hopefully come again as we move forward. I heard 2 great recommendations today. Well, a number of them, but let's see if we can expand the task force with credit unions. If Mr. Who's our friend?
Schmidt.
If Mr. Smith was here, he's, I'm not sure how old Mr. Smith is, he would probably do a backflip if he was here. Says he's been talking about that for a while. I think that's great. And also, I truly apologize for the website, and we'll rectify that very soon. So I promise you that. All right, let's go to our next thing. I want you all to stay around because there's another thing that we want you to hear about. And this is one of the things that Murtasa Baksamusa has been a part of. And my staff person, Roosevelt, will provide an update on the advocacy subcommittee. I'm sorry. Thank you. Thank you all for your presentation. I even forgot you were there. I apologize. Jamie, I appreciate you putting this together for us. Say thank you to the mayor also. This is an update on the advocacy subcommittee idea that we have. Roosevelt is going to give an overview. Also, this might be a good time for Murtasa also to give us some insight of this concept of an advocacy committee for this group. Go ahead, Roosevelt.
Thank you, Council President. At this time, I'll be giving a brief synopsis about the Reinvestment Task Force Advocacy Group meeting. The Reinvestment Task Force Advocacy Group met Thursday, October 27th, and on Thursday, November the 10th. During the Thursday, October 27th meeting, the Reinvestment Task Force Advocacy Group chose to meet every other month on the second Wednesday. The Reinvestment Task Force Advocacy Group purpose is to develop an advocacy group to work in conjunction with the Reinvestment Task Force. The Reinvestment Task Force Advocacy Group will provide input on the Community Reinvestment Act. The Reinvestment Task Force Advocacy Group members there's 5 members so far. They're Susan Tinsky from the San Diego Housing Commission, David Langston from ACE, Robert Lopez from Axiom, Ray King, and also a representative, Henry Miles from the San Diego Urban League, also Arnulfo Manriquez from the Chicano Federation. At the November 10th meeting at the Reinvestment Task Force Advocacy Group reviewed the Community Reinvestment Act. We reviewed the background, the purpose, and policy. At the November 10th meeting, the Reinvestment Task Force Advocacy Group also reviewed policies and recommendations from ACE presented by David Langston. The recommendations such as property value protection, ordinance, divestment from big banks that are harming our communities, county level mandatory mediation, and also state level dual track foreclosure process. During the Reinvestment Task Force Advocacy Group meeting, we talked about meeting with a representative from PICO and also the San Diego Organizing Project on how to pass a responsible banking ordinance here in San Diego. Also, I want to thank Mr. Smith, he's not here today, for providing our office with some information regarding the Community Reinvestment Act in 1989. It was very informative. Also, Mortaza, I want to thank you also for the information regarding the advocacy roles on education and collaboration. Any information that this board has on to improve the RTF, please provide it to me. I'd like to share it with the group. At this time, I'd like to call up Mr. Henry Miles from the San Diego Urban League. Mr. Miles, I'd like to give a brief overview on what we discussed at our last meeting on Thursday, November the 10th.
All right, Mr. Miles, I'll give you a couple of minutes to kind of fill in any of the gaps that Roosevelt left out.
Yes, sir. It was my pleasure to serve on this committee, and one of the things that we talked about is that it's nice for everybody to blame the big banks. The big banks made millions of dollars, but what happens is that a lot of times, because just so that you know, I do normal modification foreclosures for free. I work with Fino, and I average about 12 to 15 modifications per month. So I know exactly what I'm talking about foreclosure. The problem is that with the big banks is if an investor has the loan, what takes place is the banks have to follow the investor guidelines and their hands are tied.
Before you go too far, we just want to, we're really focusing on the advocacy subcommittee work,
Okay.
and just kind of fill in the gaps of where you all are and what's
Yes, sir. Okay, so what we decided to do is we made a recommendation that if you want to hold them responsible, that the investor and either or the bank should be held accountable. Then you will actually see a difference, because then it will allow the bank more flexibility and the investor will have more flexibility to it, and it should speed the process up. Okay, for one modification.
All right, thank you. Murtaza, is there anything else that you wanted to add on where we should go with this or what we should do?
I want to have a
Speak
big
into the mic
picture.
before I get jumped on again.
A big picture approach, and I mentioned this to Roosevelt as well. A few years ago, Bob has been here longer than me, but 2008, when we had the foreclosure crisis hitting us, we had this body actively involved in elevating the issues and concerns. To a great extent, we don't have the regulatory authority, or to a great extent, even the purse strings, to make a significant impact, but we can have hearings that included regulators coming in, bankers coming in, and telling people, the public, about what's going on. we had full crowd always. We used to have every single meeting was like this. And since then, it's kind of dropped off. We've had empty chairs. And the part of the role of this body that I see is education, in getting the word out from what's going on in our community so that the voices can be heard at the correct corridors of power that can make a difference here. I think that these hearings should be held. For example, recently I mentioned to Roosevelt that there was in LA Times an article on buy here, pay here scheme. We should be ahead of all these problems that come down in the future and hit our communities. This is a scheme on predatory lending, on preying on people buying used cars and then selling them at a much higher interest rate than they would pay on a regular loan. So for example, that was just an example, that we used to have these kind of forums where we can anticipate the crisis as it is brewing and raise the key concerns. The second is collaboration. I think that this body can work because of the connection we have. We're also linked to the city and county, and therefore, and also we have the data on the CRA, for example. We just heard about a presentation on how the city is, by an active participant in the market, is influencing the market. We can use these CRA criteria to influence our decision making as the city and the county in whom we choose to bank with. So we can use that as a carrot and stick approach. We can collaborate. We can have Freddie and Fannie give us their portfolios of notices of foreclosures, for example, to understand how many of them they're holding, how many mortgages they're holding, that we can actively try to engage them on. So those are some of the ideas I have.
And I think that's what we're going to do. And I'll tell you, you understand the issue has been because of an interpretation of the community development block grant rules. We could not have our executive director, couldn't pay them that way. So what we had done traditionally, we can't do now. But so I think this is the idea I came up. I think will work with this advocacy group. I think next month we should vote on actually creating this one. It's informal now. That's why I didn't want to hear the total report. But if we establish one here through vote, then that group can help with hearing these issues, having these hearings, bringing those issues to the table that possibly it might be not as comfortable as some folks around here doing it, on this actual committee doing it. And so that's the goal, and I think that those things that you listed are things that we're going to be able to address as we move in the future, and I think people will come. I think people will come and people will give us input. So I'm looking forward to it. Just so you know, next week, our next meeting, I do plan on putting it on the agenda to vote on, to establish the actual committee, and then move forward from there. All right. Any other comments at all? None? All right. I said we're going to try to get to 1:15. Last one, item 7 is report from staff, request from volunteers to participate in a did I just say that? I just said that, didn't I?
Yeah, this is for feasibility. This is
Oh,
for
okay.
feasibility study.
All right.
The one that Mitch Thompson is championing. So I just gave the core of what the work is going to be, so that if anyone is interested, to let me know so that we can schedule something meetings on this. That's it.
All right, with that, I'm going to adjourn the meeting until our next meeting in January. Thank you all for coming, appreciate it. You guys say hello to the principal and everybody else.